China's stock market is down significantly from its peak. Now is the time for intervention. The government won't sit around and watch their markets continue to fall, so they need to get fancy and create a way to push these stocks up. Money, or more accurately debt, is sloshing around the financial system, but as the pace of the rush of money slows, the markets will follow suit. You came here for the truth, so let me unveil that for you. Today we're going to talk about China, but I want to begin with Japan. Let's start with this. I've been covering this factor for quite some time now, showing you how much government intervention there is, showing you what the central banks have been doing, admittedly, whether it's the bank in Switzerland, the banks in Norway. The Bank of Japan is doing the same thing. They print money and they're buying one type of asset. Whether that is the stocks, whether that is mortgage-backed securities, whether it's any form of these paper assets, including ETFs. Now, I showed you previously that the Bank of Japan had 74% of the ETFs. That number increased 75, 76, and now it is at reportedly 80%. Imagine the central bank prints money. They buy all of the ETFs. Basically, it's 80%. And what happens to the value of those ETFs? As far as I'm concerned, they are worthless. The only reason why that other 20% is there is because the 80% is there, giving you faith that, well, the central bank will just buy up the rest of the shares. The central bank will be there to buy up the rest of the debt. They'll be there. But when you have this piece of the pie, that small piece of the pie, and the government owns the rest, what is the significance of that? So we've got basically the world, which is pretty much nothing, and you have the government owning 80% of it. They also own, last time if I remember correctly, it was something like 40% of the stocks. They're now the top 10 holder in most of the stocks now, all the big stocks. We've got a problem. Massive, massive problem of intervention in Japan. Look, they're all doing it. It's not just the Bank of Japan. You look around the world, you see the same thing. All central banks. I've shown you here before, outlined them many times before. The Central Bank of Switzerland is doing the same thing. In fact, they're going out there and acting like a hedge fund and buying up US shares, something that I haven't covered in a little while, but I assure you I will continue to track their progress. Japan's government pension investment funds portfolio has exceeded its 25% allocation target for domestic stocks for the first time, a milestone that will force the world's largest pension fund to retool its strategy for stable returns. Of course, they're just going to go and continue the same thing. This has to increase. The government, whether you're talking about the, in this case, pension funds, or we're looking at central bank, or through some sort of subsidiary, they will have to buy more and more and more as real investment pulls out, particularly during the next crisis. Well, it gets into more details here. I mean, it says the fund that manages 156 trillion yen, that's $1.4 trillion, in assets typically balances its holdings among Japanese bonds, stocks, overseas bonds, and stocks. So they're changing their tune a little bit, going over that 25% mark, but I think it is ultimately the case that they have been selling off or letting their US debt mature, and they want to be able to prop up their own markets. I think that is a definite factor here. China's $941 billion sovereign wealth fund wants permission to invest, check it out, in domestic stocks and bonds for the first time, as it tries to end restrictions on its mandate following government moves to open up financial markets. So here they are, you got $1 trillion worth in this sovereign wealth fund, and it's now going to start buying up stocks and bonds in China. Huge stimulus package, essentially, the way I look at it. China Investment Corp has laid the groundwork for an application to the central government to let it invest in domestic capital markets. These people declined to be named, of course, as it usually is. It isn't clear whether the CIC has submitted the request or whether authorities will grant approval. I do believe at this time that we've seen some weakness, and here is where there can be a nice introduction of a lot of money here going to be pumped into it. Not necessarily the whole $1 trillion, that's the whole fund, but they can start reallocating some of that into these stocks, into these bonds to push the markets up. Big time. We need another big buyer, obviously, here for China to continue this, to make up for that shortfall that has been experienced. That's the only way they're going to do it, unless they want to use the People's Bank of China to have them monetize the debt that they have and simply do what Europe is doing right here with the CSPP, buying up corporate debt. You know, it gets into more details here. I think I'll move on. You get the point. China's shadow banking whole scheme. There's a shadow banking all over the world, but they've been trying to crack down on it, supposedly. And here you can actually see it's moved to a record low, at least on this chart going back into 2006. Really cracking down on it right now. It has moved to a level that has not been seen before. That's interesting, I should say, in terms of the change, right? And that right here tells us that something big is happening, that's for sure. Whether it's positive or negative, I don't know, but obviously you don't want shadow banking, so it's good, but there's always seems to be something else behind the scenes. Whenever I dig into something, I find wasn't what I initially expected. So we'll see. I'm going to continue to keep my eyes on it and we'll bring it to you. China bears the highest stock of corporate debt of any major economy. This is massive. Now, while they don't have the biggest total debt, we're talking about corporate debt. So you could see the corporate here is the red area. China is on the right-hand side. So you're seeing that. You can compare that to Japan, obviously, in total. Also seeing Greece in here as well. And you can compare the, for example, household debt, which is right here, to any of these other countries, whether it's Switzerland, for example. Where is Canada on here, if I could find it? Right here. Massive amount of household debt. Just in comparison, you can see the difference. Anyway, I thought it was important to note this because when you see what countries are involved in, when you say they're in debt, well, I want to know on every level. I want to know how indebted the government is, because that's important. Because if the government is in debt, ultimately the taxpayer will have to foot the bill. And then that brings me to the households. How indebted are households? Too much mortgage debt, car financing or leases that they have. We're talking about all the credit cards, line of credits, and so on, okay? And then the corporations too. They've been creating this system of perpetual debt, and it is not sustainable, never was, to be from the beginning, of course. Always have a solution prepared. record China trade surplus with the US. This has been rising for years and years. Nothing's really changed in that regard, that's for sure. We can see that it has escalated over the years, and I do believe that although there will be setbacks along the way, this will probably just continue on and on. Okay, just a couple more here. This all brings me back into the issue in the first place, and that is quantitative easing, that is monetizing the debt, that is utilizing central banks for anything other than to laugh at. Okay, S&P 500 returns during the QE era. So it breaks down all the different points here, whether that's QE1, whether we're getting into no QE, so we have this time frame of getting into QE, then there's no QE, the stocks fall a bit, and then we get into QE2 at this point, and then they stop QE2 and it goes down. Then we get into Operation Twist, and then they suggest the end of it, it comes down a bit. So it's all about either forward guidance, which basically, according to the Federal Reserve, those words mean we tell the market what it's going to do. We don't even do anything, we just talk. Or actual action in that, bringing interest rates up or down, or quantitative easing measures. And that has a huge effect. Right now, we are seeing that the stock market, since QE3 ended, has definitely risen. Okay, that's very, very clear. Looking at that, what we can see is that other central banks have come around to pick up the pace. They have clearly come in, whether it is the Swiss National Bank, whether it's any of the other markets out there, are all dependent on quantitative easing to one degree or another. So that's very important. Now, this devalues the currency. This makes it creates this whole, I would say, scheme. The bankers, it allows them to use debt against us. It is the system of control. US is set to become the world's top oil producer this year. I just wanted to throw this in here, and I want your opinion on this. Because of shale, we have seen the US producing so much oil now, and it is obviously beneficial not needing to import it from other countries if they can have a lot of their own domestic consumption. But constantly, I'm seeing reports of the potential danger of this, of fracking, of utilizing these new technologies in order to get the oil from the earth. And that is starting to frighten me, because areas where they would never have these different earthquakes, and they're getting like hundreds or thousands sometimes. Sure, they're small, but what's it doing to the earth itself? And I think we're seeing a lot of volcanic activity taking place today. We're seeing a lot of strange things occurring. And I don't know. I know there's a lot going on here, but I think this could be at play. So I want to know your thoughts on it. Okay, so this is in connection with something I did recently, or something I talked about recently. I wanted to bring it to you. The IRS says that 360,000 Americans with seriously delinquent overdue tax payments will be denied passports or passport renewals if they do not pay the money that they owe. Well, I think that it's a fundamental right for people to travel. And the government should not have a say. If you are able to travel to that other place, then why is the financial system built on debt intentionally, so that you're getting into debt? And then that debt holds you back from traveling where you need to. I don't think necessarily that a person should be traveling if they're in debt. That costs money. But it's not my desire, it's not my opinion, it's not my place to say what people do. That's why I really don't like this. And then we have this. Government waste. I love covering this. Air Force $1,200 coffee cups could last longer thanks to 3D printing. That's right. Yes, a $1,200 coffee cup. Why? Because they can reheat themselves. Interesting. Technology, great. Sure. I just find it a little unusual to be paying this much money for coffee cups. Just more waste. That's what we see all the time. I mean, it's just a small example, but it really highlights the point. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel, so I do appreciate that very much. If you want the financial education you were not taught in school, then these two books have it all. There are links in the description for you to check out. Take care.